Hello. They still give me a microphone. That's cool. Welcome. Thanks for coming out so early. I know Edward Snowden is talking in the other room. I think you made the right choice by being here and seeing people in person. Raise your hand if you know what a DAO is. OK, good. That's what I expected. It will get a little bit in the weeds, I hope. But raise your hand if you are a part of a DAO. Cool. A decentralized autonomous organization. So we have a jam-packed I think 4 sessions today in this hour and a half, 2-hour block. Really excited to see you all here and also introduce our first panel on the rise of the new digital cooperative. We're going to be looking at this from a bunch of different angles. So first off, please welcome to the stage our host, Jen Sanasie, along with Jeff Kauffman of JUMP and Seth Goldstein of Bright Moments DAO.
Thank you. Where would you like to?
I'm going to sit here. I've been told I have to sit here. Hello, everyone. Good morning. DAOs on a Saturday morning. What a weekend we're in for. I'm Jen Sanasie. I host The Hash on CoinDesk TV. I'm also the content director at Windranger Labs, which is a core contributor in the BitDAO ecosystem. I'm so excited to be joined by both of you here on stage today. Jeff, why don't we start with you? Give us a quick intro to yourself and how you participate in a DAO ecosystem.
Yeah, thank you. Thank you, everybody, for hanging out with us on this vibrant Saturday morning. So my name's Jeff, longtime agency sort of brand marketing entrepreneur and creator. And over the last couple of years, got sucked down the rabbit hole, started a community called JUMP. It's grown very organically over the last year to about 2,500 marketing and advertising professionals. Couple fun stats. Half the Fortune 1000 have someone in the community. Every major advertising agency is also represented. So it's a jam-packed group of really smart people.
Awesome. And Seth, you are the founder of Bright Moments. Why don't you tell everyone what's going on with you?
So Bright Moments is a DAO, an NFT art gallery DAO. We started in Venice Beach about a year ago. We've been minting our own DAO tokens. They're called crypto citizens in Venice Beach with the crypto Venetians on art blocks, in New York with crypto New Yorkers, in Berlin last month with crypto Berliners, and we'll be minting 1,000 crypto Londoners in July. So we've got about 4,000 members of our DAO. Anybody that mints one of these NFTs or buys one on the secondary market is part of the DAO. We vote as a DAO where we go next to get to 10,000 NFTs by the end of next year. So the DAO just voted that city number 6, because the first city was in the metaverse called the Crypto Galacticans. City number 6 will be November in Mexico City, and then 4 more cities next year. And everywhere we go, we do art projects, mostly generative art. In New York, we did a great work with Tyler Hobbs called Incomplete Control, which was his first drop after Fidenza. And so we mint our crypto citizens in each city, and we also work with amazing artists as we go.
Awesome. Well, this panel is called The Rise of a New Digital Co-op. And we call them decentralized autonomous organizations, but I think a lot of people have a problem with that name because many of these decentralized autonomous organizations aren't often decentralized or autonomous, or sometimes even organizations, depending on what you're looking at. When you hear the term DAO, Jeff, what do you think?
I mean, it's a complex term. When I first came across the term and started to see these organizations or these communities kind of pop up and start to operate around these ideals, it's just one of these things where it's like, even if a DAO isn't decentralized, it's not autonomous, and it's not an organization, the ethos that these communities have is something new and special. And then I think we're just trying to figure out what these little technical sort of elements are that make it decentralized or whatever that may be. But when I think of a DAO, I think about a certain set of values that we're all trying to work towards. And I think that's what's got most people very excited.
Yeah, Seth, did you have anything to add to that?
Yes, I agree. I think technically, when I think of a DAO or I think of Bright Moments, it's a multi-sig on Gnosis with, in our case, I think we have 5 signers, and 3 have to approve any transaction from the treasury. So it starts with that. It's not a fiat bank account. It's a on-chain shared wallet, and any NFT or any ETH or any stable coin that comes out of it has to be approved by more than one person. So that in and of itself is decentralized. I think when you add to it token-gated Discord, so that you have to be a holder of one of our NFTs to enter into certain conversations and participate in certain snapshot voting mechanics. You add those things together, and it's a movement away from, I've been an entrepreneur and a venture capitalist in Web 1, Web 2, and now Web 3, and I just got tired of like asshole capitalism, where you have these board meetings, you have presentations, and you're raising money and just saying you're crushing it, and it's just a really bad trickle-down system. And so when we started Bright Moments, I was just committed to doing things a different way. And I think this term progressive decentralization is something we should talk about, and it's really important.
Yeah, it's funny you mention that structure, and I think as we have big hopes and dreams for what DAOs can be, a lot of that traditional structure that doesn't work has kind of crept into the DAO space, right? When we're trying to incentivize community members to all participate equally, it doesn't actually always happen like that. And the people who hold the most tokens often have the most voting power and therefore make the decisions. How do we get past those challenges?
It's a great question. I think one of the, if you're strategically trying to operate and start a DAO, one good way to go about it is don't introduce the tokens too soon. There are fantastic examples where an NFT or a token is introduced from the get-go, and it works pretty well. So I don't want to say it's like an either or, but it's good if you can sort of find this rhythm and find this sort of collective action without the token. And I think that's sort of proof of sort of like product community DAO fit of sorts. And so that's one way to hurdle or get around this like notion of, okay, we're a DAO, but 5 people really control 30% of the tokens. Voting participation is like 5% of the overall community. So there's going to be a small group of people that ultimately make the decisions. That can still result in really great products and really great communities, but it's not really achieving that ideal. So yeah, just kind of like seeing how you can go about making decisions without a token is a good place to start. And then, the idea of progressive decentralization and, kind of identifying one small thing to decentralize around versus trying to decentralize every decision, then you end up with a bunch of cooks in the kitchen. Oftentimes everybody's busy, right? You have these amazing people inside of these communities and DAOs, but they have full-time jobs, they have families. So the expectation that they're gonna be able to put all of themselves into these projects and make decisions is unrealistic. But if you can kind of identify really niche use cases and then decentralize that, and once it's working, you can progressively move into these other things. And then before you know it, your community's making decisions in a very healthy, decentralized way around 20 or 30 sort of key components of your community.
Yeah, I'm living it, so I haven't really thought. It's great to get up here and actually think about some of the stuff we're doing, but like, it's a battle. It's like a nonstop, like trying to coordinate and not control. And in our case, we have an operating team. We try to avoid traditional metaphors of like core team, right? It really needs to, the words you use are important as well. So we have an operating team, and we pay each other in ETH. And that alone creates some accountability, because we pay each other ETH from the multi-sig, and people see what each other gets paid. And if someone's not contributing or not holding their weight, there's a lot of FUD, in our sort of operating channels. And so that helps kind of course correct. The other thing that we're doing in terms of this progressive decentralization, and there is this term of DINOs, DAOs in name only that we have to, prevent. But in our case, we have a really simple and I think fascinating token distribution system. So we started it, in one wallet with a lot of centralization in my wallet a year ago, and the first step was building out the team and distributing those tokens to the core team and to initial kind of members and investors. And when you think about it, we're going to get to 10,000 NFTs by the end of next year. There's no other form of equity. There's no ERC20 token. It's all ERC721s, and that will be the full DAO denomination. There's no other stakeholders other than those 10,000. We started with 1,000, which is sort of the founding team. Then we minted 1,000 crypto Venetians. So the founding team had 50% the control suddenly. Then we minted 1,000 crypto New Yorkers. By the end of the 10 cities, that founding core team is only going to have 10%. And beyond that, every city we go to, so for example, London, there's 1,000 mint passes to mint a crypto Londoner and join the DAO. 333 of those we sell. So we sold those for 1 to 2 ETH to pay for getting space in London, getting housing, designing the exhibits, et cetera. Another third, so another 333, we airdrop to existing DAO members to drive engagement, to drive loyalty, and to reward the existing community. So 333 were dropped to about 4,000 wallet holders. And the last third, specifically 334, we give away to the local community. So we're literally out in parks, nomination forums, pubs, getting people that we don't know, that aren't on Discord, to join the project. For many of them, it's their first NFT. And that's what we do city by city. We'll do the same thing in Mexico City in November. And so by the end of this, I think we'll have a community that's really interesting, that it's not a filter bubble. It's not a bunch of degens aping into an NFT project and hoping to pump it and then leaving. We're trying to build something more sustainable.
Yeah, I think in the world we live in, right, we don't live in a complete Web3 world. We don't live in a world that's completely digital. So DAOs really need to coexist with legal entities if they want to operate in the physical world that we live in. And some of the famous DAOs that we've seen pop up over the past few months or the past year, like Constitution DAO, Fry's DAO, made headlines. There was a recent story of a DAO that entered into a strategic partnership, I believe it was, with Yield Guild Games, and they kind of spoke out because they said what we got from Yield Guild Games wasn't what we had agreed to in the contract. But the DAO community members had never seen that contract. It was the legal entity that was partnered with the DAO that signed the contract, and the community members didn't really understand that. When I see that, I think that presents a lot of challenges. It feels like we have this mirror of decentralization, but we still need that legal entity to enter into the contracts to benefit the community. And I know that that was a big mouthful, but how do we kind of balance this regulatory gray space when it comes to DAOs so that we can achieve the future that we are talking about here today?
So we had to create an LLC. So for example, like you can't use Ethereum to rent a gallery space in Manhattan. I mean, maybe some landlords are super progressive and they're willing to, and you definitely can't do it in Berlin. And so we had to set up, and we've been advised by Aaron Wright and Priyanka Desai from Tribute Labs, who are sort of like the DAO whisperers, and I know they'll be on panels later today. And we encourage everybody to follow Aaron and Pri, and Jess Sloss, and a bunch of really smart others that advised us early on. Nonetheless, we as a DAO, we established ourselves on-chain in Wyoming as a pure DAO, registered, opened up a multi-sig account, created some ERC20 tokens. We also set up a New York-based LLC, Bright Moments New York LLC, to enter into lease agreements, right? Things like that. You can't open an Amazon account and pay an ETH from your multisig, and we had to buy furniture from Wayfair or whatever. So I don't think that abuses the purity of the DAO model. I think that's just pragmatic. But I think when you think about these fiat-based legal structures, they have to be supporting the needs of a truly decentralized DAO multisig as opposed to vice versa. There's a lot of Web 2 wolves and Web 3 sheep's clothing. Anytime you hear about some gargantuan VC firm in Silicon Valley throwing tons of fiat, millions of dollars to some NFT project, there's probably fiat Web 2 financial engineering behind it that would say, wait a minute, that's not crypto native. And so you have to be wary of that.
So in that case, it's sort of like we're not getting away from having to use some of these legacy infrastructure, but it's more about like that transparency that, hey, there is this legal entity in New York that helps support what we want to do, and we can't do it without that legal entity, right?
Right. And I think when you get to these points of the how we act, and is it a commodity, is it a security, is it a governance token, there's far smarter minds than ours here on the legal side and the accounting side that figure that out. One of the things that we did recently is we created a side DAO or a sub DAO called Bright Opportunities. So if you go to brightopportunities.io, it's a separate accredited investor investment DAO to invest in NFTs around the Bright Moments ecosystem, because we end up with these high value NFTs in our treasury, and we wanted a separate entity to be able to invest and hold them with accredited investors. And you can't necessarily do that with a DAO where you're giving away tokens to people in every city.
Have either of you faced challenges setting up these LLCs or working with Wyoming? I haven't personally, but I hear the infrastructure that's being set up there is just being done wonderfully. Have you encountered any barriers, or is it as seamless as we've heard?
It's as seamless as you want to make it, right? I mean, there's a lot of traditional lawyers and accounting firms that will tell you all the things that you shouldn't be doing and can't be doing, and if you listen to them, it won't feel seamless. And there are others that I think are more enlightened that will just tell you to go with it and trust that the regulatory framework will follow. One of the bills, I guess, in Congress right now, or to the New York legislature, is whether things will be considered, whether it's going to be governed under the CFTC or the SEC. And if it's under the SEC, there's an issue about NFTs being seen as securities, and that will really slow things down. If NFTs are seen more like commodities, then there's going to be a lot more liquidity and volume. But again, that's not what I'm super focused on.
And we should probably also delineate between the types of DAOs. So the area that we're both playing in are these DAOs and communities and projects that are very much tied to the real world and need to bridge back into a lot of amazing stuff that we've created as a human collective. But then there's these other DAOs that are purely on-chain, and everything that they do is on-chain. So think of more like a Uniswap, or they're governing just pure tech. And I think that's important to make a distinction of. It's just kind of like which path are you kind of going down, whether you're the founder or you're joining these entities, and then you'll kind of have a better sense for like, okay, we need certain things if we're going to bridge back into the real world, and we're going to sign lease agreements, and we need these things. There's sort of a different structure there than versus like that pure sort of digitally native organization, that's sort of why DAOs exist, right? We didn't have a native business structure for the internet. We've always, we've had the internet for the last 20 or 30 years, and we've been using meat space org structures to manage everything on the internet. And DAOs give us that first little bit of internet native business organizations, and it came mostly out of a need from the Ethereums and Uniswaps, and now there's this second wave that are starting to apply it to use cases that bridge both the old world and the new world.
Yeah, I love that you made that differentiation. I think when I think about DAOs, it really is about community. It's about creating an organization around that community. And almost everything in the Web3 space is about that community, right? NFTs, I always say, I look at NFTs like the next iteration of social media, communities forming around these projects. And now we're seeing NFT projects creating DAOs so that they can participate in real world agreements or digital agreements. And one that pops into my mind when I think about this is the Bored Apes, right? They formed their DAO. Is there a need for these projects to be forming all of these DAOs? I mean, it feels like we are going to have an ecosystem of DAOs, and do we need all of these DAOs? Like, where is the, what's the cherry on top? Like, what's this special thing about DAOs? How do we think about them when we're, I know I'm like rambling a lot. There's a lot going on in my head right now. How do we find the special DAOs that are going to last through, you know, the next few years, that are going to come out of this bear cycle and really be something that informs how we move into the future?
Well, it's going to be a lot of trial and error for sure. And you brought up community. And so it seems like whether it's a product or a service or an experience or whatever, if there's a desire for the initial creator or founding team to really lean into the aspect of community, then these new tools like a multi-sig and this on-chain sort of voting, it gives a new way for a creator or a founding team to co-create with a community. And so if that's sort of a strategy, and it's certainly not an end-all be-all strategy where everybody has to execute that, but it's a wonderful way to sort of build and create, especially as a creator or as a founder. If you really enjoy that feedback loop of co-creation with the community, then these DAOs, this DAO tooling starts to enable this really dynamic way to co-create with a larger group of people that we just didn't really have before.
Yeah, and I think ownership is a very loaded word, you know, and people talk about what's the essence of Web3. And I just say ownership. It's a layer of ownership that's available for everybody to see and participate in. And it's been hidden from us for 20 years on the internet. And I was a venture capitalist in New York, and I was a VC, an investor, and a founder in Silicon Valley. And like, there's so many Wizards of Oz behind the screens controlling capital in this effect where when it finally, you have the opportunity to buy a share of stock through E-Trade or Robinhood, whatever it is, it's gone through so many hands and so many rounds of seed capital and Series A and B and C and growth capital and the late stage venture firms and the hedge funds that the retail investor is holding the short end of the stick. When you go back to the beginning of last year, I guess late 2019, we had NBA Top Shot, right? We had, and we had Super Rare, we had Foundation, we had sort of this beginning, and the apes came back, not the apes, but the punks kind of reemerged, and Beeple was doing his thing, and that was kind of the rise of this latest NFT boom. But you also had meme stocks and GameStop, and what happened with the retail investors saying, fuck you, Citadel, we believe GameStop is going to go up, and I don't care if you're betting it's going down, right? And there was this kind of like empowerment that we're all owners, and as 6529 says famously, like seize the means of production. And there's something about that going on with DAOs that's very powerful, that you can enter in or exit a project permissionlessly, right? And in the case of ours or other DAO tokens, you can buy in on OpenSea and you're part of the DAO. You can sell it and you're out of the DAO, and your votes come with or without that. And that's very different than trying to buy. I mean, you know what it was like trying to buy a share of Airbnb when it was private, 4 years ago or whatever? It's impossible. Or Facebook before it went public. You need to know somebody. It was very illiquid, and it was a boys' club. And I think DAOs have the opportunity to radically democratize that. But it is around issues of ownership and securities regulation that need to get figured out. And the securities laws, ironically, were meant to protect the small investor, But now what they're doing is they're keeping retail investors from being able to participate in some of these economies.
Yeah, I think the regulators hide a little bit behind that protect term, especially as the technology progresses as fast as it does. I think we're seeing a lot of regulators and government entities show their fear now that everyone actually has access to do things that they weren't able to do before and participate in financial products and instruments that previously were, like you said, only for a small boys club. And so when I think about DAOs and what they're doing, it's really about providing that access. With that access, though, education is needed, and we talk about that so much in the space. DAOs are so new. I think everyone is still figuring out what it is, what it means for the community, and what it means for the DAO founders. Where do we start with that education so that we can have fully informed DAO communities?
Ethereum wallets, self-custody wallets, MetaMask, Coinbase, whatever. Like when we started in Venice Beach, we gave away these NFTs, and in order to do so, we'd open up an Ethereum wallet on MetaMask and send you a token so you can mint an NFT, and guess what? Like you're part of the DAO. It's as easy as that. Otherwise, it seems like you have to learn, like go to computer science school, and it's not that hard, right? So we have to demystify that, and we have to onboard people into self-custody wallets, Ethereum, Tezos, whatever it is. But I'd say starting with MetaMask, get people to open up a wallet. It's literally downloading a fucking app and writing down your private key, and that's the education that needs to happen. So it isn't this kind of gated, community that people are afraid of joining. It's going to hold the whole industry back if we don't onboard more people.
There's some classic brand building that has to happen in the space, and some awareness and familiarity and consideration, and then all of these things everyone has to go through. I remember when I was first getting my wallet as MetaMask, and I was wondering if MetaMask was a scam, right? I'm all by myself in Dallas, Texas. It's not a tech hub, right? Like I don't know people that are deep into this space. I'm trying to learn online. I come across MetaMask, and at the time it was like, am I gonna get scammed through this? It's just like I didn't know. And so education is certainly key. It's one of the reasons why I was strategically, as I started trying to figure out what I wanted to do in the space and how I could help grow the space, just kind of looking at my background coming from the agency world and working with big brands and thinking through, okay, well, if we can have a community where the individuals inside of some of these largest brands and largest agencies can become educated, then they can go back into these incredibly large organizations themselves, these huge brands with huge reach and massive amounts of capital, and they can sort of take those ideas and educate even further. So there's a bit of a strategic element of JUMP in that sense of let's educate and help get these people inside of these massive organizations equipped in a way that it's hands-on learning, not just like running through slides, right? But they're actually doing it, and then have that comfortability to then go deploy these strategies inside of these huge organizations, and hopefully just accelerate the adoption of the entire space.
On that note, Seth, when you were talking about the people in Venice Beach, did they trust when you were like, you just need to get this MetaMask wallet? Did they just get the MetaMask wallet? I imagine they had a lot of questions, and they felt like you did, that it was kind of scammy.
It helps when you're giving something, not taking something, right? And I think that's what's core to our project, and I think a lot of the most successful projects is when you're coming from a place of like, here's a free NFT, but in order to receive it, you need to open up this app and open up this account. And we would literally like pay for people's gas. Or we'd open up Venmo and they'd send us some dollars and we'd send them $30 worth of ETH. And that just became like the cornerstone of the project. And now we're working with Coinbase and Ledger for hardware wallets, and Samsung and Artblocks as partners. And when we were in Berlin, we had 2,000 people come every night over the course of 10 nights for NFT Art Berlin, and we had a CoinDesk, a Coinbase booth, we had a Ledger booth, and people would come in, they'd onboard, and then they would mint with us as part of that experience. And so we've made, we call them cryptoons, like cartoons that like Schoolhouse Rock, but for crypto, and like teaching people how private keys work and teaching people how cold wallets versus hot wallets. And we had Jamie Foxx as the voice of one of our characters in New York. And I think it's essential, for the next, if we're at 1 million, how do we get the next 10 million people onboarded?
There's this element of, which I liked what you said about giving before receiving. There's this element of a spirit of generosity, right? And if you can lead with a spirit of generosity, it's gonna set the community up in a really powerful way. And the conversations that are happening in JUMP's Discord around how these large brands go to market, I can't tell you how many incredibly smart, people that are working inside of these organizations are starting to rally around. These large organizations are going to give away hundreds of thousands and millions of NFTs. They're not going to sell them.
Yep.
That's how they're going to go to market. And you're going to have to, go through these steps in order to get this free thing and then unlock this kind of utility. And there's a lot of good reasons for that as well, especially for large organizations. One is it helps the legal side of the organization feel a lot more comfortable that they're not selling NFTs. It's like, cool, we just kind of gave them away, and now that checks a huge box and mitigates a ton of risk. Two, these large organizations they do have a bit of a target on their back. We've seen some large brands jump in a little too early, not understand the space very well, and then just the bot attack kind of comes in, and the people that really want the NFTs end up having to buy on OpenSea after the bots have come in. And there's been a lot of great tech like pre-mint that has sort of mitigated and help make that as not as a bad of a space. But this very starting point of spirit of generosity and giving away NFTs is really, really smart. And I think as we saw Facebook with the integration of Polygon and Ethereum and Flow, and so there's a whole world of people that are going to start getting familiar with wallets and sort of collecting digital assets. And that's a whole nother beast of Web 2 and Web 3, and will it be done right? But there's a massive amount of education that's happening there that's overall net positive and good for the space. And so, if we're going to make some predictions, we're going to see a lot of large brands give away hundreds of thousands and millions of NFTs, and it's going to onboard people very, very fast.
Jeff, Seth, I could talk about this all day, but I am being yelled at to wrap it up. I want to give you both the opportunity, though, to let our audience know how they can find you outside of this panel, should they have any more questions or want to learn more about what you each do.
I'm just at Seth, SCTH on Twitter.
How'd you get that?
I'm old, and I was there in 2007 and signed up the old-fashioned way. And then brightmoments.io is Bright Moments.
You can find the JUMP community on Twitter at Jumpers Tweeting. I'm at Jeff Kauffman Jr.
Thank you both for entertaining the inner thinkings of my mind when it comes to DAOs. It's been a pleasure, and I'm sure we'll see you around the conference.
Thank you so much. Thank you.